What's up, everybody? Welcome to the 31st episode of the Investing Penguin. Covered calls and cash secured puts. A quick shout out to our newest subscribers, Mark Shellhammer and Coconuts Colado. If you are new to my channel, stick around as I reveal the numbers for the month of February. And stick around till the end as I share some interesting facts about Ukraine and the band Badfinger. And please hit all those buttons, subscribe, like, and share. It's supposed to help all my YouTube algorithms and make me filthy rich. Nah, but seriously, if you appreciate these videos, then please subscribe. It's a lot of work making these videos. For those of you who don't know me, I am the Penguin. And in this video, I reveal the profits using covered calls and cash secured puts for the month of February. Man, if you thought January was bad, well, February was even worse. Like, what the hell is Putin thinking? The guy's a madman. This could be the end of his political career. The whole world is going to punish Putin and Russia, and unfortunately, when this is all done, the people of Ukraine and the people of Russia will be the ones to suffer. Many prayers for the people who are suffering through this war. And now in the month of March, we have to see what the markets are going to do next. Let's take a look at the graphs for February. Here's the Dow Jones Industrial Average, and I've never seen this before. This is the Batman Head and Shoulders stock chart. So we ended the month of February with Putin invading Ukraine. We have the same chart pattern for the Nasdaq Composite. And the same chart pattern for the S&P 500. So here are my stocks that are on for the month of February. And if you have rolled the dice in the craps game, then you understand the on button. The Utility Spider ETF. This is my second cash secured put trade. So far, so good with XLU. JP Morgan, in process, sold covered calls. Pfizer, in process, sold covered calls. Citigroup, in process, sold covered calls. 3M, in process, sold covered calls and cash secured puts. This stock is getting rocked by the markets. Altria Group, in process, sold cash secured puts. The Financial Spider ETF, another ETF trade, in process, sold cash secured puts. Walgreens, in process, sold covered calls and cash secured puts. Kimberly Clark, in process, sold covered calls. Facebook Meta. This is my second cash secured put trade with Facebook. I'm trying to take advantage of that huge earnings drop. Verizon. Off the bench and back in action. I sold covered calls and cash secured puts. AT&T. Also off the bench and back in action. Sold covered calls. Nucor Corp. Sold covered calls. My shares were assigned. It goes in the books as a win. And finally, Kinder Morgan. I bought back my calls, locked in profits, and I reviewed this stock in my last video. So here is my Intel stock, sitting on the sideline and not collecting any premium because the trading price is too far below my purchase price. For Intel, I'm going to hold, collect the dividend, and wait for the stock to recover higher so I can start selling covered calls again. This is not what you want, but at least you can collect some dividends. So let's review my Kimberly Clark covered call trade in greater detail. Kimberly Clark was down with the markets during Putin's invasion, and I decided to put in a limit order for the $129.50 price. It also has an ex-dividend date of March 3rd, so I was looking to capture the dividend payment. On February 28th, my limit order was filled and I bought 200 shares of Kimberly Clark at $129.50 a share. I sold two covered call contracts for $1.60 for the March 18th expiration and the 131 strike price. I decided to keep the strike price just slightly out of the money considering how the markets are going. I collected a premium of $318.88. Now, if on Friday, March 18th, Kimberly Clark closes above 131 a share, then on the following Monday, my 200 shares of Kimberly Clark will sell at 131 a share. I'm expecting to make a profit of $618.63 for 21 days, which will be a 41.5% annualized return. Plus, I will be capturing the dividend payment of $232. Now, if Kimberly Clark trades sideways and never breaks above my strike price, well, then I keep the shares, I rinse and repeat, and write the same covered call again and keep collecting premium. Next, we're going to review 6 cash secured put trades in the month of February. 5 of these trades, the markets were getting hammered during Putin's invasion. The first trade is Walgreens. I already own 500 shares of Walgreens, so I was looking to buy 200 more shares at a discount using the cash secured put trade. On February 23rd, Walgreens was trading at $45.75 a share. I sold 2 cash secured put contracts for 58 cents for the March 11th expiration and the $44 strike price. This was a deep out of the money strike price, so I was taking smaller premium but getting bigger downside protection. I collected a premium of $114.88. If Walgreens closes below $44 a share on March 11th, I am buying those shares at a good discount, which is fine since I already own 500 shares of Walgreens. And if Walgreens closes above $44 a share, the option will expire worthless and I will still make a profit of $114.88 for 16 days, which is a 29.8% annualized return. Here is my Verizon trade. I already own 800 shares of Verizon, so I was looking to buy 200 more shares at a discount using the cash secured put trade. On February 24th, Verizon was getting rocked and trading at $52.61 a share. I sold 2 cash secured put contracts for 96 cents for the March 11th expiration and the $52.50 strike price. This was a slightly out of the money strike price, so I was taking larger premium and getting smaller downside protection. I collected a premium of $190.88. If Verizon closes below $52.50 a share on March 11th, I am buying those shares at a good discount, which is fine since I already own 800 shares of Verizon. And if Verizon closes above $52.50 a share, the option will expire worthless and I will still make a profit of $190.88 for 15 days, which is a 44.2% annualized return. Here is my Facebook trade. This is my second cash secured put trade on Facebook after the stock got hammered due to earnings. Rinse and repeat, baby. On February 22nd, Facebook was trading at $201.87 a share. I sold 1 cash secured put contract for $1.16 for the March 4th expiration and the 180 strike price. This was a deep out of the money strike price, so I was taking smaller premium but getting larger downside protection. I really didn't think Facebook was going to trade below 180. I collected a premium of $115.44. If Facebook closes below 180 a share on March 4th, I am buying those shares at a great discount. I think Facebook at 180 is cheap. And if Facebook closes above 180 a share, the option will expire worthless, and I will still make a profit of $115.44 for 10 days, which is a 23.4% annualized return. Here is my Altria Group trade. Altria Group was getting hammered during Putin's invasion. I guess the markets thought tobacco sales would be hurt by Putin's war. On February 24th, Altria Group was getting rocked and trading at $49.04 a share. I sold 2 cash secured put contracts for 75 cents for the March 11th expiration and the $48 strike price. This was a slightly out of the money strike price, so I was taking larger premium and getting smaller downside protection. I collected a premium of $148.88. If Altria Group closes below 48 a share on March 11th, I'm buying those shares at a good discount, which is fine since I've owned Altria Group before and $48 a share is a good price. And if Altria Group closes above 48 a share, the option will expire worthless and I will still make a profit of $148.88 for 15 days, which is a 37.7% annualized return. Now, how about the ETFs? The financial sector was also getting hammered during Putin's invasion of Ukraine. The markets were scared that big banks had too much exposure to Russia. When looking at ETFs, you want to make sure that you review the underlying stocks that make up the ETF. So I decided to sell a cash secured put, and I had the potential to buy 200 shares of XLF at 37 a share. On February 28th, XLF was trading at 38.41 a share. I sold two cash secured put contracts for 55 cents for the March 18th expiration and the $37 strike price. I collected a premium of $108.88. If XLF closes below 37 a share on March 18th, I'm buying those shares at a good discount, which is fine since I will start writing covered calls. And if on March 18th XLF closes above 37 a share, the option will expire worthless and I will still make a profit of $108.88 for 18 days, which is a 29.8% annualized return. Here is my XLU trade. This is my second cash secured put trade on XLU. I decided to rinse and repeat, baby. Once again, when looking at ETFs, you want to make sure that you review the underlying stocks that make up the ETF. So I decided to sell a cash secured put, and I had the potential to buy 300 shares of XLU at 66 a share. On February 14th, XLU was trading at 66.58 a share. I sold three cash secured put contracts for 95 cents for the March 4th expiration and the $66 strike price. This was a slightly out of the money strike price, so I was taking larger premium and getting smaller downside protection. I collected a premium of $283.31. If XLU closes below 66 a share on March 4th, I am buying those shares at a good discount, which is fine since I will start writing covered calls. And if on March 4th XLU closes above 66 a share, the option will expire worthless and I will still make a profit of $283.31 for 18 days, which is a 29% annualized return. Well, we discussed a number of trades, so now let's get into the numbers for the month of February. Over $7,600 in profits for the month of February. So the green is covered calls, the blue is cash secured puts, the orange is dividends, and the purple is stock gains. So in the month of February, I sold 10 covered calls, generating over $3,000 in premium, aka cash flow. 3M, Nucor, Pfizer, JP Morgan, Walgreens, AT&T, Citigroup, Verizon, Kimberly Clark. You'll notice I bought back my covered calls for Kinder Morgan, which I discussed this trade in the previous video. In the month of February, I sold 11 cash secured puts, generating over $1,600 in premium, aka cash flow. Facebook, Pfizer, the utility Spider ETF, Viacom, 3M, Facebook again, Walgreens, Citigroup, Altria Group, Verizon, and the financial Spider ETF. Also in the month of February, I captured 4 dividend payments generating $1,983 in profits. Verizon, AT&T, Kinder Morgan, and Citigroup. And finally, in the month of February, I had 1 stock gain and 1 stock loss. My Kinder Morgan stock ended up selling at a small loss, and I reviewed this stock in episode number 30. And my Nucor stock sold for a gain, and I reviewed this stock in episode number 29. So watch those videos for more details. Oh my, I call this the good, the bad, and the ugly. So not every trade is a winner. You have to take the good with the bad, and the losses are just downright ugly. For you millennials, the good, the bad, and the ugly is a great Clint Eastwood spaghetti western. So ending the month of February, I've got over $37,000 in unrealized losses. My AT&T and Intel stocks are really dragging me down. I think JP Morgan, Citigroup, and Walgreens will be fine. I'm a little worried about 3M and Pfizer. Those might take longer to recover. But in the end, these unrealized losses don't really bother me since these stocks all pay dividends and I think they will eventually turn a profit. So what went wrong in February? Well, I overpaid for Intel, so it's sitting on the bench. JP Morgan, 3M, Intel, AT&T, and Pfizer are all trading below their purchase price. My year-over-year profits decreased, that's not good, and my unrealized losses increased, and that's not good. And nobody knows the extent of the fallout from Putin's invasion of Ukraine. So what went right? Well, my Nucor trade is a win. Facebook and XLU are rinse and repeat trades. I captured the dividend for my Citigroup trade. AT&T is off the bench and back in action, and Verizon is off the bench and back in action. Well, that's it. Is it me, or does this seem like a long video? Time moves slower when you're losing money. Let's hope March is a better month, and Putin comes to his senses. More videos are coming, and stick around for 10 seconds more as I share some interesting facts about Ukraine and Badfinger. So this write-up is copied from the Ukraine website, so it's still up and running, which is good. The photos are taken from various sources on the internet. I think Ukraine's coat of arms, the trident, is pretty cool. There's like 1,000 years of history related to this symbol of power. The photo in the lower right-hand corner is from Ukraine's website. That is a picture of the original coat of arms approved by the Ukrainian parliament in 1992. Special love I have for you. Money music, Badfinger, Baby Blue. Feel free to pause the video and check out and read the history on Badfinger and Baby Blue and their relationship with the Beatles. This song was revived in Breaking Bad, one of the best shows of all time. And whoever the music producer was for Breaking Bad, that person picked the most perfect song for the show. This song, Baby Blue, evokes unbelievable emotions from people. If you read the comments and posts about this song on the internet, you will be blown away. There's something about this song that makes a deep emotional connection with people. I never heard this song until watching Breaking Bad, and now Baby Blue is at the top of my list, along with songs like Simple Man by Leonard Skinner. Disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only, and I really hope you enjoyed this video. I am only sharing my experiences and opinions. Investing involves risk, so please seek advice and educate yourself.